Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the 5-8-13 EMA strategy session today. We're going to do a live webinar. I'm going to show you how to trade the 5-8-13 EMA crossover. We're going to do some live scalping. We're going to take a few trades. Right now, I see a lot of candidates. Right now, the markets are on the move. Definitely moving to the bear in a big, big way. Right now, arguments are being heard over the legality of the Trump tariff program, and that's in front of the Supreme Court, and it is having an impact. This is something that we just have to get used to at this day and age. There's a lot of different market movers. We're not just necessarily, stuck to our economic calendar anymore. We are definitely looking towards everything. So I may do a news brief later in the day if we do see some big-time news. It feels like we're going to, but the markets are definitely all over the place. And then remember, tomorrow, NFP Live's not going to happen. They went ahead and it looks like that's going to be, the government's going to stay closed. We're already at a record 37th day. We're seeing a lot of the air travel be limited. We're seeing the EBT cards. It's a mess right now. So we may do a little bit of a news brief. I'm not necessarily sure just yet. Tomorrow, we're going to be going right after the U.S. Open. We're going to trade the 15-minute orb strategy. We're going to get you up and rolling on this powerful strategy and see if you can see if we can spot a few in real time. Break down some trades. We're going to trade that on the US 30, the US 500, the US 100, and then we also may introduce the US 2000, which is the Russell 2000. So it's definitely good to see everybody back in the room. A lot of familiar faces here. Bobby Bob, good to see you. Andrea Gorwal, always a pleasure. And Tuku, that's in our How to Trade community, and then over in our Switch Markets community. We got a lot of folks out there. Team Marine, always good to see you over in YouTube land. So that's what we're dealing with today. Remember, if you want to go ahead and get into any of these strategies and trade them live, go ahead, head on over to switchmarkets.com. They've got everything you need. If you're in a municipality that they do service and support, you will definitely be able to get in and get the job done in thousands of markets, zero commission accounts, all of it's right there. I got a question yesterday, Shane, are the payouts fast? And I said, well, I've never got one. I'm in the United States. Switch Markets doesn't service folks in the United States. And I recommended just going on over to Trustpilot, giving it a click, read some of the reviews. By and large, they're pretty darn good. Most of them are 5-star reviews, 4.7, excellent out of 809. A lot of these things give you an opportunity to see exactly what other traders think about the Switch Markets lineup, and it really is all about value over there. So if you need a broker and you're interested, head on over to Switch, and they'll get you up and running quickly. Okay, so the 5-8-13 EMA crossover strategy. It's a big-time strategy, and it's one of those that is very simple. People try to make it hard. Don't make it hard. Easier is always better. That's one of my favorite rules. If it makes money, it's right. Easier is better. If I don't know, I'm not going to sit here and BS you. I'm just going to tell you, you got to Google it. I don't know. So when we try to put a strategy out, there's a lot of strategies. There's a million strategies out there. Some of the ones that I'm privy to, some of the ones that I use every day are a bit advanced. And don't worry, if you're brand new to the markets, you'll get there. You'll be able to look at a TPO chart and read it. You'll be able to look at volume. I started dipping into volume last week a little bit, and I got so many questions on how to read volume that I go, I probably should stay off of volume because it takes a lot of experience to understand what exactly volume means. It means a lot of things, and it really all depends on your timing. But what we do know about a 5-8-13 EMA scalp is that the parameters are going to be the same for each and every trade you take. And also, you're going to have the ability to add that confirmation device we're going to talk about, the RSI. So if the 5-8-13, if we're doing that maybe on a 1-minute chart or a 30-second chart, then we can throw that RSI in there as confirmation. Definitely huge, guys. So there's a lot going on, and I think that this will give you a good place to begin looking at the markets if you don't already have a strategy. I talked to a trader the other day. Definitely one of those folks that said, Shane, I don't have a strategy. Been in the market 2 years, had some ups and downs, doesn't have a strategy. And I said, okay, that's all right. There's nothing wrong with that. There's absolutely nothing wrong with not having a strategy. A lot of folks make money every day, and they show up and they don't really have one. They just pick price. They say, well, I like it, the bullish, bearish. And you can get away with that for a long, long time. You really can. You'd be surprised at how many days you just show up and say, okay, let's go ahead and sell 3 red candles in a row. Let's sell. 3 bullish candles in a row. Okay, let's buy. Those things can work. The pros out there aren't going to tell you that. They believe that everything has to be so difficult. Well, I'm the technician and I know how to do things. Not really. I mean, if you're looking at gold futures right now on a 1-minute chart, that's easy. You could have easily said, okay, we had a real tight rectangle range here. Let's take a look at the last few minutes. We're on a big up day. We had sort of a tight range. Okay, let's just go ahead and play a breakout. Believe it or not, traders do that. Okay, does it work long term? It could, as long as your risk management's rock solid. but for most traders, you need something with a little bit more structure. And that really is what this strategy is all about. And I'm going to show you where to find a bunch more strategies as well. So let's see. I got folks over in YouTube land. Good Team Marine, always a pleasure. Tina Jing, what time will you stream tomorrow, please? I'm going to be going 30 minutes after the U.S. Open. So we're going to go ahead at 8 a.m. my time, 10 a.m. Eastern. So that's going to be about 3 hours before we usually stream. I'm going to be right in there, and we're going to get in, and we're going to break down some orbs on the 15-minute chart, and then we're going to take a look at. We're not going to go over the strategy really. We're going to pick some live setups and see if we can execute. So that's when I'm going to be going. That's when the action should be there. And one of the reasons why we're going to do that is typically as Friday wears on, everybody's already gone for the weekend. So I don't want to talk to an open room if everybody's going to be here. That's great. And then also we want it when there's some action. And with the way the Supreme Court is thinking about handing down a judgment on the tariffs, we may be able to get a fantastic breakout tomorrow. I think it might be one of those days where we could play a break. So about 3 hours beforehand, Tina, about 8 a.m. my time, 10 a.m. Eastern. Definitely. I'm learning the orb. I watched your video last night. That's great, Tina. Always good to hear. Isaac, good to see Isaac. As long as it helps me scalp trade better. We're going to scalp, Isaac. We're going to scalp. Let me see. Shane, since I'm based in D.C. and unable to open a Switch Markets account, am I still able to access the tools, sheets, etc.? Should I just stick with those at How to Trade? Well, I mean, cruise on over to the Switch Markets homepage. You should be able to just click on resources and find all the free tools. The free tools are for everybody. So feel free to go on over there. We're going to be doing a lot of blogging coming in the coming months. I know that's going to be a big deal. I'm also going to be doing some market analysis over there and posting that stuff every day, similar to what we do in the How to Trade trading room, but with a little more depth to it, more forecasting types of things. So it's all that's for everybody. That's for sure. All right. Okay, guys, let's go ahead and get started. So over on the How to Trade YouTube channel, we've got about 20,000 subscribers. There's quite a few of you. It's grown really in the last year or so, tripled or quadrupled in size. But in any case, this is where we put all of our strategies, at least the ones for right this minute. 5, 8, 13 EMA scalping right there in under 5 minutes. Get in there, check out the video, and that's going to get you up and running very, very quickly. And you can see some examples. What we're going to do today is I'm going to talk you through the program. We're going to show you how to set this thing up on TradingView, and it's going to be a pretty good show, I think. We're going to get in there. We're going to be able to do it. So let's go ahead and just get after it right now. What we've got to do is go over the rules. So let's start with the rules. That's a good place as any to start. Okay, so the strategy rules, very simple. When the 5 crosses the 8, look to trade. That's it. When the 5 EMA crosses over the 8, we look to buy. When the 5 crosses under the 8, we look to sell. Now here's the qualifier. Price must be above all 3 for a buy or below all 3 EMAs for a sell, and then we buy or sell on the first bar close. Let's get lined up on TradingView, and you'll see exactly what I mean. Very, very simple, relatively easy. So TradingView, we're going to go to indicators, and we're just going to go right down to moving average, just like always. Exponential, we're going to go ahead and give that 3 clicks. There you go, and then you can see what you've got to do now is pull up your settings, and you're just gonna put up a different type of different periodicities, and you can also change the color and things. I'm not really going to get too carried away with that. We've already got some templates built, but this is a pretty good way to just get in there and get that 5, 8, 13 going in a few minutes. Remember, based on bar close. We're going to use the close. We're not going to use the mid. We're going to use the close. No smoothing, no offsets, no nothing. And there you go. So that's going to be just a good look at how you do that on TradingView. Let's head on over to the Switch Markets MT5 platform. I know a lot of you are using MT5, MT4, MT5. That's great. I know that it can be a bit of a challenge to use this platform, but it's relatively straightforward, at least putting our indicators in. What you're going to do is you're going to go up to Insert. It's you can't really see it real great right there, but it's the Insert drop-down menu. You're going to go to Indicators, and then you're going to go to Trend. Trend right there. You're going to go to a moving average. This is how it's a little bit different. You're going to make sure that your method is exponential, not simple or smooth. And what you're going to do there is just plug it in, 5, 8, 13. There you have it. Insert again, indicators, trend, right down to where's the moving average, somewhere in here. In any case, we've done this so many times over the years. 5, 5, 8. There you go with the 8. So there you go. I recommend making them different colors. Very, very important that you be able to see automatically. You want to be able to see these automatically, and if the colors are the same, you're going to get confused. So that's a good look at the 3, though, and that's essentially what your chart should look like. Just make them different colors. That basically is all there is to it, adding that to MT5. So right here is sort of the example that we're going to look at. We're going to go right here. We're going to begin with our NQ, our NASDAQ futures chart. We do this a lot, and you can see what we have on our chart, and what we're going to be doing with our trading is our red is our 5, Our blues are 8, and our purples are 13. Okay, so in order for us to buy, and we're going to go ahead and let's go ahead and just take this RSI off for right this minute, getting a bit ahead of ourselves. But the big thing we want to do is just wait for crossovers. So if we're on a 5-minute chart, you can see right here, here was your crossover developed. It's going to be the first bar after the crossover. So right here, the crossover developed, the 5 crossed over the 8, and then prices above all three moving averages. That would be your buy. So in this instance, there's your buy right there on the 5. Okay, where's your stop loss going to be? A couple of options. You could either do it right beneath your trigger bar there, okay, or you could take it down and give yourself a little bit of room to work and put it beneath the previous swing low. Use that market structure as really being a tool to drive your trades. I really favor the market structure angle because it's going to give you an opportunity, potentially, to ride these moves where they need to be ridden too. That means that if we're very, very tight with our stop loss, the odds of us getting stopped out are very, very good. So if your stop loss is right here, they're pretty good that you're going to get stopped out. If you have a little bit more room to work, you're going to let the market work for you and you're going to let these things develop. Now, I did say scalping. So are we going to be scalping a 5-minute chart? Probably not. We're going to have to get down into the real tight time frames. Number one question I'm always asked, Shane, forex pairs, what are you going to be looking to, what time frames are you going to be looking to use? Now listen, just for your basic trading knowledge, not necessarily scalping, but maybe short-term positions, 4-hour chart's great for forex pairs. 4-hour chart's great, maybe a 30-minute chart, but I would keep that right around the session that you're trading, the products that are within that session. So if you're trading Japanese yen, you could probably trade a 30-minute chart during that Tokyo session more than likely, and maybe the U.S. session if it's paired up with the U.S. dollar. Maybe Great Britain pound and euros. Maybe you want the beginning of that London session with a 30-minute chart. Just whatever you do, be sure that you're in a time when there's liquidity in the market. You've got to be in there when there's liquidity in the market. If there's no liquidity, there's not going to be any volatility. And if there's no volatility, there's not going to be any opportunity. That's big. It's very, very important that we understand that. So let's say right here that we're stalking this trade. 5-minute chart. What just happened? There's your crossover right there. Okay, the red, that's our 5. The blue is our 8. What happened? We crossed over right there. So price is down. It's beneath all three of these moving averages. Can I sell right now? Absolutely. Let's go ahead and take it for a ride. Let's get my order up here, show you exactly the kind of orders. We're just going to go with the market because we could definitely be looking to sell right here. So let's go with a sell on the market, and let's go ahead and send them. Okay, let's send them short. Okay, you'll notice our entry point's not that great. It should be a little bit better than that. It should be right there, right on that bar close. Now remember what we're looking for. The bar close after the crossover. The first bar close after the crossover. Okay, the crossover's done. We done crossed right there. Crossed over. Okay, once we crossed over, we're looking to get short. Or excuse me, crossed under, we're looking to get short. So right now we're short. So what are we going to be doing with our take profit and our stop loss? We have options. If I'm using a 5-minute chart, I may want to take my stop loss and maybe put it right in here, something like that. We could certainly do that. I could also go to the top of market structure. We can do that. All right, it just really depends on what you want to get accomplished. And another thing, don't worry about my leverage. That's sort of that's just, that's a 4 lot. That shows you how big this NASDAQ market is, though, how big the volatility is. But something like this, what do we want to do with our trade exactly? Now, I'm a standard. I really preach the same thing. I've been consistent for 4 years. I always say, listen, I like to start with a 1-to-1 type of a trade. I really do. I like to start with a 1-to-1 type of a ratio. That gives me an opportunity to win over 50% of my trades, and I get paid. But a lot of folks don't like that. They like 1-to-2s, 1-to-3s. Well, I mean, if this is a 1-to-2, essentially this is what you're looking at, a trade like that. Now, it's not bad. There's nothing inherently wrong with it. But what I would recommend is if you're going to take trades like that on the 1-to-2s, then you definitely have to do it earlier in the day, like right around the open, probably following the open, something like that. But interesting type of a mentality here. If you wanted to try to get in on that big trend day down, it's already a big trend day down. But if you believe that you're going to go lower right now, I think it's questionable. We could definitely base out here. But right now we're following the pressure. Our strategy told us to get short, and we got short. Now, how did we know how to do all of that? The rules. 5 crossed under the 8. All right. Price was below all 3 EMAs. And then we sold on the first bar close. And there it was. And right now it's going against us. Still a little bit of time left, though. We're going to go ahead and let this one twist in the wind and see what develops. But remember, if you're going to be taking these trades and if you're going to scalp, it's got to be what? 1 to 3% of your account balance on any one trade. And if you're going to scalp, I highly recommend adding, if we're going to work short time frames, I recommend adding a confirmation device. And that's absolutely imperative. So let's go ahead and add the confirmation device now. And I'll go ahead and show you what I mean, and then we'll just sort of open up the floor for questions. So right there, there's sort of a demonstration. That's what we look like. But what's confirmation? Now, confirmation can save you. It can keep you out of bad trades. In technical analysis, confirmation refers to the use of an additional indicator or indicators to substantiate a trend suggested by one indicator. Since indicators are not perfect predictors of future price movements, a trader often feels more secure deciding to act on a signal if there's another device or another technical that sort of lines up with it. That's it. That's all confirmation is. All confirmation is adding another indicator to sort of streamline the trading process and filter out the bad trades. Think of your confirmation as a filter. That's what it does. It's designed to keep you out of bad trades. Now, what we're going to do today is the RSI. I'd use this as a confirmation device for pretty much all the strategies because it's easy. Number one, RSI, the relative strength index, is easy. So let's go ahead and take a look at this. On TradingView, you're going to go up to indicators. You're going to give that a click and just go right down to relative strength index. And go ahead and click on that relative strength index right there. Give it a click, and what's going to happen is it's going to add it to your charts as its own separate window. You don't have to get it as its own window, but I highly recommend that. Remember, the RSI, if it's above 70, outside of this envelope, it's above 70, we're looking to sell the market. That means we're looking for a cross under, and if it's beneath 30, then we're looking for a crossover, and we're looking to buy the market. Now, if you're taking a look at this RSI with respect to the trade we just made, what would we have done? Nothing. Now, you can say the market was severely oversold right in here, but you'll notice that the 5 sort of crosses over the 8 back here, right? So you would have been in on this buy, more than likely. Now, this sell wouldn't have been a play. You'd have still been holding longs, unless you took the money right here, which you might have done because it's a pretty good trade. So that's sort of that's what confirmation is. So let's go ahead and let's do this fresh. As far as MT5 goes, same basic type of a thing. You're going to go up here to insert, give that a click. You're going to go to indicators, and now you're going to go to oscillators. Remember, the relative strength index is an oscillator. Go here, give it a click. Pops up, period of 14. Do not change the periods or anything. Just leave it on the factory settings, and there's your RSI. Not too shabby, right? Pretty simple. Now, what the RSI does do is it does help us really filter trades. So when the RSI is like around 50, where it's not overbought and it's not oversold, that's pretty much a good signal that, yeah, look at where your line is. Look at where your RSI right in here is. 52, 50, 49. And look at what price is doing. It's flatlining. You don't really want to trade when you're flatlining, so especially if you're scalping. So something to think about there. If we're talking short time frame scalping, then we're in a situation where you're going to want the RSI to either be an overbought or oversold territory. Okay, let me go ahead and take a look at the questions. Now we're going to go hunting for some high-impact scalping. Let me see it. Isaac, was the $2 billion debt U.S. government buyback worth it? Who knows? I don't know. When they start talking about buying back debt, I always feel like it's an accounting trick and they're just switching money back and forth. So I don't know that. Let me see. Tina, I was dreaming about the orb. Yeah, the orb's a pretty good strategy. Let me see. Andy Tong, how are you rating this in comparison to the 920? I think that the 920 is, I like the 920 for swing trading. The 5813, though, I really prefer it as a scalping device. Just because the 13 EMA is my favorite. We made a YouTube short not too long ago, and it was called Don't Forget the Most Important EMA of Your 5813. It's the 13. The 13 is sort of the built-in filter to this system, this strategy. The 13 gives you the idea of where the broader market direction is. You know, it's not necessarily where we're at, it's where we're going, right? So if you want to know exactly what's happening in the markets, I'm not really looking at the 5 or the 8, I'm looking at the 13. The 13's a big one. So for me, that's my go-to. But big picture, do I like the 920? The 920 is fantastic for position trades, but also it's fantastic for it's fantastic for day trading too. 5813 is pretty good for scalping, that's for sure. All right, this is the gold futures chart. I want to go ahead and get this going. Let's go down to a 1 minute and get see what we can do here. Okay, so we've got our EMAs. They're all lined up. We've now on a 1 minute chart. We really do need to start looking for our confirmation. Very important that we get confirmation because remember, a 1 minute price bar. Okay, let's just look at that bar right there. The 1 minute price bar tells us what? It gives us a profile. It gives us a story of the market, if you will, of all the buyers and the sellers that interacted in that minute. That's it. That's it. Inside of that minute, that's not much information. That's not much to go on. No matter what anybody tells you, they say, well, all I need is a minute-by-minute chart. And I go, great. That's fantastic. Good for you. Just remember, when you're trading minute charts, when you're trading 15-second charts, 30-second charts, there's not much going on. Yeah, there's business being done, and you can see a market, but you can definitely see the signature of the market and what's happening. But what you can't see, maybe, are longer-term macro levels. Maybe the volume's going to dry up. There's all these different things that go into trading that aren't exactly shown to you in a 1 minute chart. So if you're going to be trading something like a 1 minute, I would be looking very, very hard at that RSI. And the reason why is because you want to trade it when the timing is right. You want to scalp it when the timing is right. See right here, we've sort of got our RSI, and it's trending higher. We're almost to 70. Once we get above 70, this gold futures, then we can look to take a sell. And that sell is just going to be the 5 crossing under the 8 and price closing beneath all 3 moving averages. That's it. That's all we're looking to do. So the qualifier is, yeah, you got to be in the RSI. You got to be in overbought territory and have a chance to sell. But then what has to happen? The 5's got to cross under the 8. Price has to be beneath all 3 of them, which means it's got to be below the 13. It's also got to be in overbought territory. So you can see we're really starting to filter price action here. We're not just going, okay, I think it's going to go down or I think it's going to go up. There's a lot of technicals that have to line up when we're using confirmation for us to make a trade. If they don't line up, then we cannot make a trade. That's the deal. If you're going to be a scalper, if you're going to play a 1 minute chart or a 30-second chart or a 250 tick chart or a 500 tick chart, highly, highly, highly recommend confirmation. It can keep you out of problems. It can keep you out of big, big trouble. That's what I would say. So, all right, we got nothing here. I mean, we got to get into, we got to find something that's actually moving for us here. WTI crude oil futures, December contract. We were almost down here in oversold territory to take the buy. We are not there yet. You'll notice right up here, we were in overbought territory, so we were looking to sell this thing, and there was the sell, and it worked pretty well. The crossover developed and finalized right there. You got in on a heck of a move, 59.20, all the way down to about 59.05. That's a nice 15-tick move, $10 a tick per contract. That's not bad. That's not a bad move at all. That's for sure. Yes, sir. Good to see you. So long story short, Andy, I like the 920. I like the 5813. I like the 920 for position trading and swing trading, and I like the 5813 for scalping. I hope that helps just a little bit. All right, let's see if we can find something else. Let's go to dollar yen. Do we have anything happening on the dollar yen? Okay, we were sort of in overbought territory right there, and there was sort of your drop. So you'd have been short right in this area, probably more than likely right there. So there would have been your cross under. Well, the cross under develops right there. This is a good way to really show you how specific you need to be with that. So where's your crossover at? Crossover probably is right there, right? Bar closes right here. The bar closes. Last call for alcohol. Bar closed. You got to get out, right? There's the sell. Closed beneath all 3, right? There's a chance you got that trade. Boom. Interesting. As far as what can we really do with forex pairs, you get into these real tight time frames, you're going to struggle a little bit with it. It's okay, though. It's not the end of the world. You can definitely get trades. I would recommend 5 minutes, at least 5-minute blocks, just to make sure that you have enough volatility to do something with it. You can see right down here, we were in oversold territory. We were looking to buy. Not really much right there. Let's go to the Great Britain pound. 5-minute chart. Let's go down to a 1 minute because we are sort of extended a little bit. Maybe we can get a trade going here. Okay, great example of the 13 saving your bacon. Okay, right here, you'll notice, where are we? Overbought territory. We are above that 70, right? We're above 70. Looking to sell right there, right? So now, what's up? We're looking for a crossover. Where did we get the crossover? Did you get it? Didn't get it, but it didn't matter even if you didn't get it. Were you closed beneath all 3? It's probably not a crossover. Remember, this stuff has to be obvious. Sort of touches it and then bounces. That's not a crossover. We want a crossover. So what could we really be looking to do right now on this Great Britain pound USD? We're right up there around 70. We could be looking to sell, but we've got to get the cross under, and the price has to close beneath all three. Has to do that. See what our NASDAQ trade's doing. Yeah, we're getting destroyed there. Went down, got us entered, and now reversed out of it. It's going to be an expensive loser with that kind of leverage. Definitely rolling against us there, though. So if you're looking at the Great Britain pound USD here, could be a bit of a challenge. You're going to have to wait. You're going to have to go probably back above 70, especially from these levels. Normally, we could just take the sell and use this as our stop loss, but now we're creeping higher and higher. You don't want to get involved in that. Let's go. E-mini S&P 500 futures. Okay, there's the breakout on the 1 minute. This would have been a trade that we definitely missed, right? 1 minute chart. What do you got? Right down here, you're at about 29.25, so technically you're in oversold territory. You're looking to buy the market. Where could you have bought the market? Stop loss would have been right beneath that swing low. And right in there. So you'd have been, there's your crossover finally develops. Crossover develops there. There's your bid. Price has to close above all three on the bid. Right there's your buy. And I know these are in hindsight, and it's easy to go through and do things in hindsight, believe me, I know. But that really did get you on the right side of this rebound that we're seeing right now develop in really all the indices. We're seeing the NASDAQ definitely cruising higher. Let's go ahead. Let's see if we can get potentially we're in line for a sell very soon. You'll notice right there, so we're in overbought territory. We're breaking out to the top side. So what if we want to maybe thicken the pot a little bit? Let's go down to, say, a 15-second chart. Okay, you can see right there, deep into overbought territory. So what we're looking to do right now, 15-second chart, E-mini S&P 500 futures, is we're looking to take a sell. Why are we on a sell? Above 70 on the RSI, that's overbought. We want to take the short. Now, if we're going to take this short, and this is a 15-second chart, I mean, this isn't necessarily the best idea ever. Price is going to have to close. You're going to have to see the cross under, the fives, the red one's got to cross the blue one, and then you're going to have to get in there and potentially take the short once you get the close beneath all three. So right here, 15, 10, 11. If you do get the opportunity to sell, where are you going to sell at? You're going to sell on the first bar close after the cross under, right? And the price has to be beneath all three or else you're not getting in. RSI, we're good to go. We're already in overbought. We're going to put our stop loss right above there. That's going to be our trade. Now we just got to get into it. Now we've got to get our signal. I call it the trigger. Now we got to hit the trigger. Right there. Did our crossover underdevelop? Is price down beneath all three? It looks like it. It's very close, but I think there's your crossover. Let's wait one more bar. See, you got to be very careful, especially on 15-second charts. Is that the cross under? No, it's not. It hits it and then it rallies. First bar after the crossover. Can't stress that enough. Now, on a 5-minute chart, you're probably not going to have that problem. It's not going to be that volatile because we're using such small increments for our price bars. So right here, that would be a situation where if we dove in, we got hurt really bad. Boom. Hit it. The 5 hit the 8 and then bounced straight up. That's not good. That's not good. We're still watching. We've got our sell locked and loaded. What do we need? 5 needs to cross under the 8. I always say crossover because essentially it is a crossover, but it's a cross under. It needs to cross the 8. I guess I could say that. The 5 crosses the 8, and then it closes beneath all 3 of these moving averages, and then we're looking to sell this thing. Now, we don't want a limit order. It's going to be a market order because it's going to happen fast. We don't know our take profit and our stop loss level yet. We're going to know that probably as market structure sets up. So what do we have right now happening? This is actually a great example. Let's see if we can get a little more screen space. So what's happening right here? Okay, we're watching the purple line. We're already, technically, we've got a grayed out for our stop loss right up here. Okay, now things are starting to develop. And feel free to blow your chart way up so you can see. Is that the crossover? Not yet, but we're getting there. This bar close, if we close negative beneath all 3, then we will be sending them short. Notice the sensitivity of the EMAs. Is that a cross? Yep, send them. There's your sell. Why is it a sell? Even though it was a bullish candle, it closed beneath all 3. And the crossover did develop right there. It's a sell. So now we just took the sell. Where's everything going to go? Well, it's not accepting the sells or whatever. Whatever. What would our trade look like? In any case, it locked up. That's typically how this stuff works. Your stop loss is going to be right up above that candle right there. That's where you're going to want your stop, and then your take profit's going to be down in here somewhere. Now, that's going to be a structured way to take the trade. If you wanted it, and remember, this isn't representative of where our entry point would be. Our entry point would have been right down there on that doji, but we got locked out for some reason. That's platform issues. So you'd have been short from there. You'd have been looking for a move maybe down into here somewhere. Now, of course, you haven't quite got stopped out just yet, but you'll notice that we are definitely fighting the pressure. The idea was to sell there and then get the break, and then we just got stopped out. Where was our stop out point? It was above that swing high right up in there. Something to think about. So what happened right there? We got stopped. Now, what could we be doing right now with 15-second chart? We're right back on the horse. We're right back on the horse, so we're going to go ahead and get ready for the next trade. So what do we have? We are in overbought territory. We are looking to sell, right? We're still on a sell. We got stopped out here. All right, that's not bad. What are we looking to do? 5 crosses the 8, crosses under the 8, and then closes beneath all 3 of them. Then we're looking to send them. This 15-second chart, if this is what you want your trading life to be, this is what you're going to be doing all day long. So we just lost. And now we're right back in there. So we got to wait. Okay, we're in oversold or overbought territory. We're looking to sell. Waiting for that crossover. So let's go ahead and get loaded up. There's our sell market, and we're going to go ahead and take it once it comes our way. Five crosses under the 8, closes beneath all 3. We're taking it. Is it close? It's pretty close. Beauty of this is once you get used to doing this, I already know where my stop loss has to be. Right up there. Right up above that swing high. That's where we were in overbought territory. So right here, this could be big. Probably within the next bar. Maybe the next 30 seconds we're going to be ready to go. If not, then we're going to have to go do something else. But take a look. Is there enough volume to run this on a 15-second chart? There's a lot of participation right now. There's a lot of volatility, so we definitely could be looking to do it. It's very, very tight scalping, though. You're only looking at maybe 8 ticks is going to be your stop loss range, something like that. That's tight. That's real tight. So let's wait and see if it sets up. Maybe we can get a successful trade here. We've had 2 losers, which if you're scalping, you could get 10 losers in a row, followed by 20 winners in a row. That's scalping. The idea, though, is to always make sure you're playing positive risk versus rewards, and that'll give you a chance potentially to get in on the action for the long term. If you just bet it all on one of these trades, use longer time frames. 15-second chart, we're looking to take 100 trades and maybe win 70 and lose 30. That would be awesome. 60-40, that's great too. That's where your edge comes in over and over and over. All right, doesn't look like it's going to cooperate with us, and that's okay. We don't really know what the market's going to do from moment to moment. Now, potentially, we could still be working with that as our stop loss. We haven't taken that sort of a double top out yet. All right, let's go ahead and just see if we can ride this out and get some follow through. All right, there it is. There's the move that probably is going to get us in. Now, are we going to go right now? Are we going to go right this minute? Are we going to sell right now? There's your crossover. Is it done, though? Did price close beneath all 3? Yep, sell it. Okay, there's your sell. Where's your stop loss going to be? It's going to be up here. Where's our take profit going to be? It's going to be down here. So that's a nice 1-to-1, something like that. Pretty close. That's a 1-to-1 ratio. 1 contract S&P 500 futures. E-mini S&P. And once again, we're getting torn up. So right this second, it's not going really great. Now, the beauty of these strategies is you can also devise all sorts of variations. You could sit here and say, Shane, it retraces to the moving averages every single time. Then sell up there. And then wait. You could certainly do that. You could put Fibonacci retracements on it as well. It looks to me like we're getting caught in the rebound and we're getting chopped to death. But that's a good look at what the executions do look like. like I said, I mean, 1 minute charts, 15-second charts, you're really gambling at that point. You've got to be thinking long haul. You know, where am I going to be at the end of the day when I just took 40 trades? Something like that. Because what did we just execute? 3 or 4 trades here in a few minutes? I mean, you could be here looking to get these trades over and over and over again all day long. Just remember, with your stop loss location, you've got to put it a few ticks above these swing highs. That's very important, especially on a 15-second chart. And you'll see right here, we're just sort of in no man's land, milling around. Are we going to get a move? Aren't we? It's going to be tough. We're probably more than likely going to get chopped out of this trade. We'll let it roll for a minute, though. Let me see. Yes, sir. I missed the beginning. 5-8-13. Why do we use the 8? The 8's sort of our baseline, Andy. The 8's the sort of our secondary moving average. We want to make sure that's going to be our initiation device. Okay, we just got stopped out again, and it's a good thing we bailed when we did. Take a look at that. Take a look at that move. You do not want to be sticking around for that, right? My point is this. The 8's huge because we're really looking at the relationship of the 5 to the 8, and then we're looking at where the price lies with respect to the 13 EMA, and then also our confirmation device. So the 8 sort of is our trigger. The 5 crossing the 8's what initiates it. If we go with just the 5 crossing the 13, which I guess theoretically you could do, you're probably not going to get a lot of these trades because the crossovers are going to develop too late. They're going to be, okay, when it crosses over the 13, then we're probably, going to be playing against ourselves a lot of the time. Something to think about there. The 8 is sort of your timing mechanism. The 13 shows you the trend. The 5 shows you what's happening right now, and the 8's the timing mechanism. That's what I would say. All right, yes, sir. 15-second charts are for geniuses. Yeah, I don't trade 15-second charts. But when we're looking for examples of how to do this, they're not a bad tool. All right, good, Andy. All right, did we just get stopped out on our NQ trade? We sure did. So that was just a devastating trade. You could see it just rallied up against us. At this point, what do you really want to be doing? You don't want to be holding shorts. The game has changed, and you can see the buyback is sort of on Wall Street. We've cut quite a bit off of these lows. So definitely something to think about there. All right, guys, I think that's a pretty good look. The 5-8-13. What do we have? 3 losers, 4 losers, something like that. Remember, if you're going to scalp, you've got to be in there. You've got to be in there, and you've got to be in there all day, realistically. Now, the beauty of these things is, you say, Shane, you got to be in there all day. You've got to be at least aware of what you want to do. And what that means is maybe you only want to turn this on for the first hour of the U.S. session to trade some of these stock market futures. Maybe you want to trade gold after the London Open, and you want to do that just for a few hours after that Open. Either way, you can do it. You could sit here for 24 hours a day if you want and do this stuff. I don't recommend that. I think you're going to get tired, and it's going to be very, very hard. But I think that what I would recommend is if I was going to trade the U.S. indices, the most volatile time of day. So I would be trading probably the first 90 minutes of the session, and then I would forget it. Then I would go do something else, and then I would look at my performance over a given period of time, and if it was pretty good, then I would be looking to do that probably as my strategy. Remember, what's going to make you profitable trading something like the 5-8-13? Risk management, of course, 1 to 3% on any given trade. You should, if you're scalping, you should be able to take 3 or 4 losses in a row. It's annoying, but you've got to do it if you're going to take a high volume of trades. Losing's part of it. Basically, what you're doing is you're trying to you're trying to profit from the law of large numbers. That's what you want to do. For me, my own personal strategy and the way that I like to do things, I like to win. I'd rather take 5 trades a week than 5 trades in 5 minutes. Taking the trades after this long doing it, it's not really where it's at. The research, the work that goes into approaching the market and being a sharp trader, to me, I get more gratification out of waiting, for a day or 2 days for something to set up. And then once it sets up, you got a great chance. To me, that's what trading's all about. But if you like strategies and you like systems, you could easily build a system around this 5-8-13. You could go on ChatGPT and you could code that thing to where the bars light up like they do for us on the 920 strategy. You could code it. You could plug it in as an algo, get that Pine connector. You could automate the thing. You could figure out, do a little back testing, figure out exactly what the best time of day historically is to trade your system. it could be done. It just really is up to you how far you want to take it and how far you want to build it. I mean, right there, we just got crushed. We jumped in there and took a few trades to show you how it worked. Obviously, that's not the way. You've got to make it better. It can be very good, though. It really can be. All right, guys, I think I'm going to go ahead and sign up. Let me see. 5 minutes and 15 minutes for me. Anything lower than that, I agree, yes, sir. I think that for me, like if we're looking at this, let's get back to this NASDAQ futures chart. You can see the volatility is just absolutely insane today. The VIX is up 10% because the Supreme Court, and they're arguing about the tariffs right now. I mean, probably every argument setting the market directional. I mean, I would really be looking at like a 30-minute. So this right here, your cross under would have been where? Right on the open, essentially. There's your first open. There's your first price bar after the open. Something like that. There's your sell. Theoretically, you could have sold there and taken the position and probably done pretty well. So there's lots of ways to skin a cat. I mean, there's a million ways to apply this strategy. We just showed you how to do it functionally. Look at this one right here, a 30-minute chart. We're just going to miss out on this. We weren't quite in oversold territory, but do you even need the RSI on a 30-minute? I don't think you do. I think you could probably just wait for the crossover right here, gold market. What are you trying to do? You're trying to grab the bottom of this thing today. All right, would we have that? Yeah, probably. The 5 looks like it's going to cross over the 8. Price maybe closes right up in here above all 3. I mean, a lot of folks would make that a position trade. Buying and betting on the rally up over 4,000. There's lots of ways to do this, guys. Your imagination is your best asset. There's no question about it. Okay, everybody. I think I'm going to go ahead and get going. All right, let's see. Andy Tong, if you were to trade the 5-8 or the 8-13-21 on a bigger time frame, what are your thoughts? Well, the 8-13-21 is a bit different. For me, the 13 is a big deal. So, you're just basically taking a time frame. I mean, a bigger time frame. I love if you're trading forex, I mean, a 4-hour chart. I haven't seen good enough evidence to wager tremendous or to leverage tremendous sums on forex charts underneath, probably a 30-minute would be the smallest I would go. And the reason why is the action just really isn't there. I mean, we just showed you the NASDAQ. Tremendous amount of volatility, and that's pretty much every day with that futures contract. That's why, I mean, that's a tough one to trade. I don't trade it. I have in the past. The swings in the money is just so big there that a lot of times it'll just scare you. But for a forex pair, I have found the 4-hour chart to perform pretty well on all these things, all these strategies we show you. I like the orb, the forex orb, where you open with 4-hour bars, first 2 4-hour bars of the week. So, I would be looking at a 4-hour chart for an 8-13-21. But remember, that's going to be more of a swing trading approach. That's not going to be a scalping approach. It's going to be swing trading, which is fine. I mean, you don't have to scalp. Believe me, I don't. The way that I do it, I buy and sell bumps off of those macro levels. You guys pretty much know that. As far as, intraday scalping with crossovers, it can be done. There's a lot of crossover traders out there that are very good. For me, I've never found really much use for those types of approaches. But I got to tell you, I mean, that 920 with natural gas, I mean, it's going to hit our target. And we've done that on stocks and commodities. I like the 920 swing trading, definitely. This 5-8-13, if you're looking at 8-13-21, yeah. Now, if you're trading futures, that's different. Equity index futures right around the U.S. Open, you could probably go down to a 5-minute chart and be okay. But I don't know. I used to trade the 5-minute chart almost exclusively, and it really wore me out, and I didn't like it. After a while, I said, I'm tired of the 5-minute chart. So I went to the 30. So I go to the 30-minute chart. That's my bread and butter during the day. And then when we have a macro level, I'll be looking at 1-minute charts to manage trades for sure. So I hope that helps a little bit, Andy. All right, guys, I'm going to go ahead and sort of take off today. You guys are talking about the massive drop in gold. I mean, you can almost see this thing setting up. Gold futures. I mean, there it is. Already in oversold territory right there. You're 30. You're right on 30. So that probably would have been your bid right in here somewhere. Looks like the bottom might be in. Personally, I'd be looking at 4,000 as being a big deal if I was trading gold today. All right, guys, I'm going to go ahead and sign off. Remember, tomorrow we're going to be going a little bit earlier. It's about 3 hours earlier than usual, about 8 a.m. my time, 10 a.m. Eastern. And we're going to set up the orb, 15-minute orb bars. We're going to go through. We're going to set up our equities indices. And then we're going to make some trades and see how it goes. Can't really go any worse than this did today. So we'll see how it goes. No, listen, the purpose of these webinars and workshops is to take questions, is to answer everybody's question, and also just to show you how to execute the trades. As far as the long-term performance of these strategies, a lot of that's going to depend on you. We have some guidelines. If you want some guidelines, I can give you a few pretty good ones to keep you in the game. But basically, when you fine-tune a strategy like the 5-8-13, a lot of it's going to depend on you, your own expertise, and your own creativity. So there you have it. All right, everybody. I'm going to go ahead and take off here for a few hours. Bobby Bob, hey, Coach, what's your view on WTI? WTI, all right, I'll take one quick one. We'll look at WTI crude because it's starting to really develop into what I wanted to see out of the market, and that's bearish. And there's a lot of things going on here that are playing into the bearish read on WTI crude that really sort of are signaling to me that the big breakout is probably coming our way, the bearish one. So here's your monthly chart. All right, we've already started off a little bit negative here in November. It was a tremendous negative month with a nice bounce at the end in October. So I would be looking at last month's lows. Last month's lows are somewhere down around 55.96. We're coming down a little bit, 59.35. So if you do see that break beneath last month's low, more than likely what will happen, we're just going to throw this out there, but more than likely if we break that level down there, that 55.96, we're probably going to run down there and take out the yearly lows as well, which are somewhere right down around 55.15. If that's the case, then yeah, we're going to see some big-time action to the downside. My target would be somewhere around $50. I know that's basic, $50, $52.50, probably $52.50 by the end of the year. I feel pretty comfortable making that call, and that's about, what, $6.50 or somewhere in that neighborhood. Now, as far as, trading this intraday, or at least on shorter time frames, you certainly can do it. I'm looking for any way really to get short. I find this to be very difficult to find any sort of market structure that I believe in, even though these are 4 negative candles in a row. They're tight, and you'll also know that we traded above, that we traded above Monday's high or Tuesday's high yesterday, and then we got the big sort of sell-off since then. A lot going on that can impact this market, so be aware of what's happening. If you wanted to build sort of a sell, you probably could do something like this, but I don't really like it. I don't like it. I mean, we went up to 60.49 today, and then we sold off. The market's clearly in compression mode. I think you're going to break 59s probably, maybe 57.50s. Yearly lows are coming. Question of when. I think that the airline shutdown could be a big player in that. We've already shut down 10% of all flights. That's a lot of jet fuel. We're saying that these shutdowns are going to, or these air travel things are going to be a lot worse too in the coming days and the weeks. They're really talking about shutting down a lot of traffic. It's going to be a logistical nightmare, but it is going to save a lot of jet fuel. And when you're saving jet fuel at that rate, that means you don't have to refine oil as fast. And believe me, we burn a lot of jet fuel in a given day. A lot of it. So that could be another thing that dumps added supply on the crude oil market, which could be a bearish market driver. And if that is in fact the case, then look out below. Look out below. All right, everybody, that's sort of my view on WTI. I'm bearish. I think we're bearish, and we're gonna head down. We're heading south right now. I think we're gonna close near the lows today. And if that does happen, I'm just waiting for us to sort of leapfrog and go for that 55 level, and I think it could happen fast. All right, everybody, we'll be back early tomorrow trading the 15-minute orb. If you have any questions at all, head on over to the howtotrade.com trading room. Send me a PM. I will get back to you. We did have a new video today on the Switch Markets YouTube channel. It's on the live currency heat map. I believe it is live currency strength meter. Go ahead and get in there and get your free one today. Pretty fun stuff. Nice little free EA for you from Switch Markets. All right, everybody, that's a wrap. Have a fantastic trading day. Trade the action well, and we'll talk soon. See you.